I get the same guttural reaction everybody else does when they get a letter from the IRS. And when I opened it, it was, we just want you to know that we changed your address on your tax return. Thanks, IRS. You scared the hell out of me for that.
Welcome to the Physician Sense Podcast, a podcast designed specifically for physicians, offering a breakdown of complex financial topics to help you develop your financial IQ, further your financial journey, and improve your well-being. Whether you're a medical student, resident, fellow, or attending physician, you're sure to learn something new that will benefit your journey. And now, your hosts, Chad Chubb and Tyler Olson.
Hey all, welcome to this episode of Physician Sense. I'm your co-host, Tyler Olson, and I'm joined by not just my Sunshine co-host, Chad Chubb, but also my Sunshine State enrolled agent and tax pro expert, Adam Markowitz. They're both down in Florida. I'm up north here in Connecticut. We're going to be talking about student loans and taxes today. Thanks a lot for joining us today, Adam.
Yeah, no, it's my pleasure. No additional nexus because I'm down in Florida with Chad, right?
You guys are, how close are you? Are you guys like a couple hours away, or I guess it could be many hours away, right?
No, you're over by Orlando, right?
Yeah. Mm-hmm.
Yeah, so we're
about an hour and a half.
Yeah, hour and a half. Yeah, close.
Okay. Oh, cool. Well, yeah, we wanted to talk about, we're going to talk about student loan planning and how tax decisions are related to that, both in terms of filing status and when to file taxes, as in, should you file an extension? Those are the main things that were on top of my mind. And Adam, we appreciate you sharing your thoughts on this with us today because you live and breathe tax and compliance. And we really appreciate also that you yourself, you're a certified student loan planner, right?
Yes. Yeah, I'm a CSLP, yeah.
Okay, awesome. Yeah. So what I thought we could start with is addressing the question, why are tax filing decisions relevant to student loan planning decisions? What's your first thought on that, Adam?
It always depends. Everything in my world is, it depends, and that can probably sum up the entire, if people take anything else out of this podcast, that's what it's probably going to be. It depends, and your situation is going to be your situation. But the timing of when you recertify your student loans is really relevant for your filing of taxes, because when you when you go to recertify your loans, they're going to be looking at your most recently filed tax return. So here we sit with returns that just got filed for 2025. Let's say you have a recertification date of May 2026 or June 2026. If you file your 2025 tax return by April 15, like most people file without an extension, then the return that will be used for your recertification is your 2025 return. However, if you go on extension to go past your recertification date, when you recertify, they will then use the information from your 2024 return. So depending upon tax filing status, how much money you earned in 2024 compared to 2025, you may be a lot more favorable in some cases, particularly in those years where, let's say you're done with your residency and you're done with your fellowship and you go into your attendant work in 2025. Well, you're not going to want to use your 2025 return to recertify your student loans when you have the opportunity to use the income from when you were either a fellow or a resident in all of 2024. Buys you basically another 12 months of cheaper student loan payments.
Yeah, and I can see that being beneficial both for managing cash flow as well as maximizing public service loan forgiveness benefits.
And sometimes it matters even if we're not dealing with people who are going into public student loan forgiveness, because, especially in those resident years and in a lot of cases your fellowship years, you're not making much money, right? So the longer that we can keep those payments low, even if you're not going the PSLF path, could be incredibly, incredibly relevant, especially since all these people that we're talking about now are people who were in school during COVID. And there was, of course, the long pause that went over 3 years, I guess, where nobody had to make student loan payments. Well, those days are gone now. So even though you do get a period of time after you're done with school before you need to start making your loan payments, it could be very relevant, even if you're not getting PSLF, to keep those lower payments, to kind of give yourself some runway, per se, to make some money when you go into your attending job, to give yourself an opportunity to breathe a little bit. So, by the time you do have to make those $1,500, $2,000, $2,500, whatever per month payments, that you've built up some runway by which to do it, even if you're not going for PSLF.
Yeah. Well, good thoughts on that. When people are going to hear this, is it going to be like January, right, Chad?
February 1st.
Oh, February 1st. All right. So we are right in the...
Happy 2026.
So
I'm not ready for it to be tax season yet. Don't do this to me.
I'm gonna say, when this goes live, it's a much different world for Adam.
Yeah. He looks very chill right now if you're on YouTube.
Yeah.
Okay. Well, all right. So, we're eventually in the midst of 2025 tax filing season. And so let's try to break this down with a couple of examples. Let's say you're working with someone who's like a PGY3 internal medicine resident, and let's say that they're still on the SAVE plan, and they come to you for tax filing, and they made $65,000 last year. What do you do with that?
Okay, well, it's going to depend on a lot of factors. The biggest one of which is going to be, are they going for PSLF or are they not going for PSLF? If they are on a PSLF track, if they are still on SAVE, we need to get them off of SAVE. In most situations, we need to get them off of SAVE. And the reason we need to get them off of SAVE is because all this time with $0 payments is all fine and dandy, but nothing's counting towards PSLF. So getting on to presumably IBR, not necessarily IBR, but presumably IBR, we'll put them in a spot where, yes, they have to start making payments again, or probably a few $100 a month. But it will at least start the clock again, because in that case of a PGY3, they probably haven't made any qualifying student loan payments at this point. So we really need to get the clock started for them to get them into a point that eventually there's a path to getting to 120. Now, if they're not going towards PSLF, then all we're paying is interest. Then it's going to be very circumstantial. Maybe they stay on SAVE and we just make interest payments. Maybe they stay on SAVE and they make whatever payments they can afford to make. Maybe they stay on SAVE and they do absolutely nothing and just wait until whatever Department of Education determines they need to start making payments, or flip onto whether it's IBR or RAP or whatever the case is for them. But then it's about making a game plan. How are we going to pay these things off? So it's always it's a multifaceted approach that involves a lot of things, more than just saying, this is the situation you're in, so if X, then this is what you should do. Tyler knows this because a lot of, for full disclosure, we do have a lot of common clients together. God, Tyler, I don't even know how many it is, but I probably did 40 plans or so for people when the day came that the SAVE forbearance was done. You need to basically do something, whether it's go on to IBR or wait until RAF or whatever the case is. It was 40 different ways to get there. When I started doing the student loan work, I was shocked at how different each one of these plans have to be. And even though ultimately the goal for almost all of them was to just get on IBR, the path to get there was very, very different for all of them, just depending upon where they are in their careers, how much money they make, how they feel about making no payments now versus bigger payments later. And every individual and couple that I dealt with, man, they were all very different situations. That's a long way around the question you asked me about a very specific situation to get back to, I don't know if there is a very specific situation that we could talk about.
Yeah, it is always going to depend. You're right. I think there are some things that simplify what the result will be, such as if the person is single, if the person is married and they don't live in a community property state, like the community property state factor.
It's fun.
Yeah. Oh my goodness. Yeah. Actually, Chad, you had a list, and Adam, maybe you know this off the top of your head, but I think it would be helpful to actually, what are the community property states? Do you have that handy, or can you look that up, Chad?
I can look it up.
All right. So it's Arizona, Idaho, Washington,
There we go.
Nevada, Louisiana, Texas, Wisconsin, California. Which one did I leave off?
Did you
Chad, you got the
you
list
say
there?
New Mexico?
New Mexico. That's the last one. That's the one I always forget. It's New Mexico.
So why does that matter? Like if someone's married, like say a trainee is married to someone who's making $150,000 in a community property state, how does that impact tax filing decisions?
You are going to pay a lot more for accounting fees if you. No, I'm kidding. I'm not kidding, but I'm kidding. So when you live in a community property state and you are married, for tax purposes, under the mass majority of situations, half of what you earn is technically money your spouse has earned, and half of the money that your spouse has earned is what you have earned. So say you're in a situation where you're a resident and you're making $60,000 a year in a community property state, and your spouse has nothing to do with medicine and has some job where they're making 140 grand. Well, both of you, in the eyes of your state law, have $100,000 worth of income. So that's really a bummer when we're trying to figure out how to lower your student loan payments when your spouse makes more money than you. But what happens on the other side where you're an attendant, you're making $250,000 a year, your spouse makes 50 grand a year. Well, now both of you make 150. So depending upon where you are in your career and where your spouse is in their careers, could definitely dictate, does being in a community property state hurt you or help you for student loan purposes?
Yeah. Yeah. Okay.
Adam, this is just a fun side question. So those, you get Alaska, Florida, Kentucky, South Dakota, and Tennessee that have the optional opt-in.
Mm-hmm.
I've actually never even thought about this until right now. Can you opt in? Like, let's just say Florida, where we are. Can you opt in?
Yep.
And it would apply like just like any other community property state? Like, could you actually kind of game the system a little bit for student loans? Let's just say that we're using high income spouse and then lower high income physician, let's say lower income spouse or maybe a stay-at-home parent. Can you bring that into play and it actually affects the income side of it, just like all the other 9 states?
You can. I don't remember the whole list of states. I know Florida is one of them. I know South Dakota is one of them. I know Tennessee is one of them. There are a few others. You can, but there are a lot of other legal ramifications to doing so.
Interesting. Yeah.
Because once you admit that it is community property, it is community property.
Yeah.
Because it is not just a matter of your earnings being community property. That house that you own, that was a family heirloom that passed down to you. If you're going to opt into community property, guess what? It's now half your spouse's. Yeah. So it's not just, I've never done it, Chad. Yeah. I don't know that I ever will because there's so many other circumstances that come into play with it, not just how you file your taxes.
Yeah. I've never even thought about it until I actually saw the opt-in option. Well, we've never seen it in practice either, but I agree. I feel like, hey, look, your student loan payment's lower, but you also just gave up half of your net worth. And maybe that's not a big position to some people, but others that could be quite the turnaround for maybe a small student loan update. But that was just a random side question. So
yeah, and you could, I mean, technically, you could opt 1 year to the next. This is community property. This is not community property. But boy, everything you do in that year being community property, it's like, I don't know that you want to play that game. I guess I could come up with some situation where some, attendant is making, $500,000 a year and they have a stay-at-home parent. I guess I could make that argument, but it's like, what are we really saving here to open up all the rest of the stuff that comes with community property beyond just student loans and taxes?
Yeah. Interesting.
This is why people should pay you and people like you to sift through this sort of stuff. Because there's I
wouldn't do that without an attorney. Let's put it that way. I would want an attorney to sign off on that being okay before I just made some tax decision to just be like, no, you know what? We're going to treat you as community property. I would want some attorney to sign off on that first.
Yeah.
Well, and I feel like I've read every student loan post out there for the last 10 years, and I've never seen that as a strategy that's been to the masses. So I can't imagine it's used very often. And to that point, maybe not at all. But it was just a fun question. To test you live on the spot, Adam, make sure you're still
there. You go.
Because I know you are.
Still going.
All right, Adam, I got another question for you. Well, and this is something that I think we've bantered about a little bit on Twitter X. There are a lot of trainees who have, they have limited funds. When they have these decisions that they need to make, I'm often you should probably hire someone, like Adam, like you or others, for a plan, even just for and not even like a student loan plan specifically, but tax filing. And they want to opt for like Free Tax USA. And let's just say we're talking about someone who has decided whether or not it's actually true, like that they don't have the funds to pay a fee to an accountant and they're going to do it themselves. What are some of the things that they risk by doing it themselves?
So let me start by saying, in probably, I don't know, 6 out of 10 cases, doing the tax return on your own, or going to H&R Block, or going to a CPA, or going to an EA, or going to an attorney, or whoever to do your return, 6 out of 10 cases, you're going to get the exact same result. It's not always about the result, though. The plan is an important one, especially if you're going towards PSLF. And yeah, I get it. It may really suck to have to fork up $400 or whatever to go to somebody to get a tax return done, but the game plan may be well worth it to you in the long run. And I tell this to the people who are specifically residents. I work with a lot of residents all the time. The irony of the whole thing is when you are paying people the most to advise you is when you don't have the money, right? And the irony is the more money you make, the less we worry about your loans, or you get rid of your loans because you paid them off, or you've gotten your PSLF. Well, that's a lot less work I need to do, so you're going to pay me a lot less, right? So the risks are that, there's a 4 in 10 chance your return is going to be done wrong, especially since we're listening to this here in the early stages of 2026. If you are someone who gets paid overtime, it's probably not going to be on your paycheck. It's certainly not going to be on your W-2, that you are possibly, not necessarily, or possibly exempt from paying tax on that overtime. If you are married to somebody who gets paid overtime or gets tips, you're not going to get a tax document that tells you you're exempt from that. You're not going to necessarily know, should you file separately, should you file jointly if you are married. The default is, well, I'm married, so I file jointly. And that may be just fine, but that may not be so fine when it comes to your student loans. So there's an accuracy piece of this for sure. But to me, when we named our business, we deliberately came up with Luminary Tax Advisors, because I do think there is a day where most of the mechanical processes are going to be handled by computers, right? By AI. But there's the human intelligence behind it, and there's the setting up the game plan and making sure you're doing everything optimally. As a particular example of some of the quote unquote easy tax situations that we run into. People who are eligible for HSAs and don't max them out don't realize they can go back and put the money in for the prior year all the way up to April 15th. They don't realize that you could put money in an IRA or a Roth IRA in some low income situations and get a credit that in some cases could be equivalent to 50 cents on the dollar of the first $2,000 that you put into retirement. The number of times that I've had people put money into a regular IRA and it saves them 70, 80 cents on the dollar, it's foolish not to do it, right? So it's those opportunities that could be missed because you, not necessarily as a physician, but just you from somebody or anybody listening to this who does not have 20 years of tax experience, right? That you don't know what you don't know. You wouldn't want, I wouldn't try to diagnose myself, right? For whatever the case is. You wouldn't want to go at this on your own in taxes too. Though, again, I fundamentally understand that there are people out there that simply, because they're in training, because they're frankly treated like crap, right? For lack of better terms, in terms of the pay that they make, that the funds are just not there for it. I still would encourage people to, at least every couple years, have somebody do it. So there every few years. So if there's something that we can go back and capture, that we can go back and do that by amending the tax return. But it's a tough situation for sure, because everything, tax prep's getting more expensive, like everything else is getting more expensive. And the things are getting more expensive faster than wages are going up, unfortunately. And we find ourselves in these situations where, it's hard for somebody to justify walking into an H&R Block or doing anything to be able to get any sort of guidance. The other thing I'll point out here, just for giggles, because you asked the question, I hope by the time this thing airs, the government is reopened, because right now, as we sit, we're working on 35 days of the government being shut down. The IRS is a mess right now. And the IRS is just spitting out all sorts of notices, some of which are legit, some of which are completely and utterly erroneous, some of which are just flat out devastatingly wrong. I have an attendant a resident who got a notice that they said the IRS said they owed $2,500. It's a lot of money for a resident, right? And I have no idea where it came from. But without having somebody like me, you're going to look at that notice and you're going to have no idea what to do with it. And that's something too. And that shouldn't be a taxpayer's problem. The IRS should be better than this, but you're going at this alone when you do that. And whatever happens with the IRS, for better or worse, that's going to be on you at that point. So that maybe is the biggest danger of the whole thing, is just how awfully run the Internal Revenue Service is right now, and how many just erroneous and wrong things are coming out of the IRS.
Yeah, even though that's going on, that was not the first thing that came to my mind. But that's a real danger.
Yeah,
like, because I know I've appreciated when I've been able to ask you questions for myself. Like, it's been like it's time and stress saving to the nth degree. So I appreciate the work and expertise that you do. It's of great value.
Yeah, I like to tell my clients when they get notices from the IRS, because this was just Halloween when we're taping this, and I gave a pitch to a networking group, and I said to them, like, the scariest thing, the Halloween play, when somebody goes to their mailbox and they open it up, because it's always the first thing in the mailbox. I don't care who you are. The thing that says IRS on it is going to be the thing at the top. It's just a rule. It just is that. When they get that and they freak out, I literally tell them, don't even read it. Open it, scan it, send it to me. I will tell you whether this is something that you need to freak out about or not. I got a letter from the IRS a few weeks ago because they changed the last 4 digits of my zip code. It looks just as scary sitting in the mailbox. I get the same guttural reaction everybody else does when they get a letter from the IRS. And when I opened it, it was, we just want you to know that we changed your address on your tax return. Thanks, IRS. You scared the hell out of me for that, So, but I tell them, seriously, just don't flip out about it. Just scan it to me. I will let you know whether you need to flip out about it or not.
Oh, man.
Like, Adam, this is from my non-EA CPA side of it, but like, I feel like there's not simple tax returns anymore. Like, it feels like everyone's at least moderately complex. Like, we plug in student loans. Let's plug in like a backdoor Roth. Everybody has at least a Robinhood account today and a taxable account. We plug in weird things that happen with HSAs, FSAs. Like, this is not a plug that everyone needs an accountant, but it just feels like, and to what Tyler just said, the peace of mind that comes with not just any accountant, because I think the main problem a lot of consumers have today is like they have someone that files their taxes, but they don't have someone to go to when they have that question, which is why, I think we speak so highly of you consistently. And there are a lot of great accountants out there that are proactive there. But what are your thoughts? Like there's no one that's just like, hey, here's a W-2 anymore that you plug in, you scan it through TurboTax, and it's like your tax return's perfect. Like, there's so many little nuances today because of how easy it is to do new things, whether that's people trying their first backdoor Roth, or again, I always use like Robinhood as an example. People open up these taxable accounts, or the times that we see 1099s missed because they didn't realize Allied Bank sent them a 1099 and it went to email, wasn't mailed to them. Again, just kind of like throwing it out there. Like, I realize when I note those things, you're like, well, that's a pretty simple tax return for you. But for like the average Joe or Jane that's trying to do their own tax return, it's not just like, here's my W-2 and I'm done anymore. There's always layers to it, it seems.
A lot of it, Chad, a lot of it is that people just don't know what they don't know. And with as undermanned as the IRS is right now, if you missed $94 worth of interest on an Ally account, you're not even going to get a notice about it from the IRS. So you're not going to know that you screwed up your tax return, but you screwed up your tax return. Part of the reason it's so complicated is they keep changing the damn laws, right? One big beautiful bill comparably, this was a small bill in terms of pages, but it's 900 pages and virtually all of it is tax. And, almost the first thing the IRS did right after the 4th of July when this became law is they basically said, we're not going to be ready for this year. So they didn't change the W-2 in 2025 to show qualified overtime, qualified tips. There is no understanding as to what qualified tips even are at this point. Forget about it if you have a business, but all sorts of stuff changed there that nobody who owns a business should go with this on their own. But yeah, Chad, to your point, there are plenty of people out there who, yeah, you can just scan in your W-2 and you're probably going to be okay. But it's that, again, you don't know what you don't know about it that makes it difficult. I see this, I know this isn't the forum for seniors right now either, but I see this with seniors a lot who just say, hey, I've got my Social Security, I've got the amount that I pulled out of my 401k, I'm done. Well, yes, you may be done, but you have no idea what you have missed. You don't know what the senior deduction is. You don't know about planning for estate planning or future planning with making sure we minimize the amount of tax that somebody pays on their 401ks or IRAs. There's all sorts of levels of stuff inside of taxes, and it's why I'm not worried about AI taking my job anytime soon, right? Because AI may be able to put the numbers in the boxes, but AI is not coming up with those answers when truly it depends.
Yeah. To your point too, we had a client that were essentially just confirming her EIN number for a solo K application, and she literally had to call the IRS 6 times last week. Wait on a hold.
Sounds right.
30 to 40 minutes per time. Her very last call, they officially gave her at least the callback option, so she finally got to confirm it. But very busy, high skilled physician that runs literally entire children's hospital, and she's spending hours on the phone per day just trying to confirm an EIN number from the IRS right now. So it's, when you said that, I was like, yeah, I don't think most that aren't calling the IRS, they don't even really notice it. But if you have any IRS issues right now, it's a dumpster fire to say the least.
Oh, it's impossible right now. I mean, even we have, for practitioners, we have a priority line that we can call. If we don't call at 7 a.m., forget it. You're on hold for 2 hours if you get through.
Crazy.
So you would think I would have some magic number to get in touch with somebody at the IRS. Yeah. Nope. I'm just sitting in a different queue than everybody else, but I'm still sitting in a queue like everybody else is.
Yeah. Crazy. Well, this has been great. Thanks for taking some time to talk with us about these details. There's a lot of important decisions to make, and there's a lot of value in seeking advice, amongst the things that we talked about today. So we appreciate the work you're doing, Adam, a lot.
Always. I appreciate it.
Yeah. I mean, it's truly, not only are you a great accountant, I know that, but having your student loan expertise, that's just, especially in the physician community, who all three of us are around every single day. That's such a unique 1-2 punch that I don't think people realize how intertwined they are. So the fact that you can wear both those hats and wear them very well is quite the skill set.
It's Tyler's fault. It really is. It's Tyler's fault. It's seriously. When Tyler, geez, it's been about 4 years now, Tyler, something like that. Yeah. When I learned where Tyler's clients were and the help that he and his clients were going to need, I went, geez, I need to do this. I kind of have to do this. So it's Tyler's fault. But yeah, this is growing into a cool little niche. We do work outside of the physician community as well. A lot of teachers too that we deal with this for. It's easy for a physician to kind of, be tunnel vision with things and go, this is the world that we're in. And yeah, I mean, I would agree with you guys that this is probably the toughest of the worlds to be in. But man, when you've got a teacher making $40,000 a year, that $30 a month in student loans between filing jointly and separately or filing pre-April 15 or pre-October 15, man, that can make a massive, massive difference to those people.
Yeah. Yeah, for real. It's early February, and if can we send people your way, or is it going to be too late by that time?
As long as it's still February, we're in good shape. No, we'll be taking clients still approximately the second-ish week of March this year.
Okay. So go to luminarytaxadvisors.com. That's your website, right?
Yep. That'll work.
And can you speak at all to your fee range, or is that too complicated to talk?
No, I mean, we're going to, for individuals, it's a little bit easier. For businesses, it's a little bit more complicated. But for individual tax returns that are just returns, we start at $400, $550 if you're an income tax state. We do have a package for student loan people where we meet 2 to 3 times a year, depends upon the situation. Once to prep the return, once to go over tax planning and student loan planning, usually around the time you recertify. And if we need some, especially in years like this one in 2025, where all the rules were all haywire for basically, didn't like the rules, wait a month, right? If we need to meet again, then we meet again. Those packages Started $1,000 for people who are single, $1,500 for married, $1,900 for those who are in community property states and are married. So that gives you some range of idea. Obviously, it depends. You come at me with 14 rental properties, it's going to cost more than $400 to do your tax return. But that's a good starting. Gives you an idea where we're at.
I appreciate the transparency because like people, they always ask, and I'm like, I don't know. So you got to talk to Adam.
Yeah, I don't hide it from people, and I tell people on my website, here's the minimum. Here was our median for the year. This particular year in 2025, our median tax return fee was, I want to say it was about $475 was a median fee for a return. But again, keep in mind not say most anymore, but probably about 55, 60% of my clients are in Florida, so they don't have to deal with state income tax returns. And I know obviously this is a national podcast. So wherever you are, we have clients. This year we did returns in, I think it was 43 states that we did returns in. So we're good wherever you are in the 50 states, including I have one client in Alaska. I have 2 clients in Hawaii. So even if you're way out there listening to this right now, we take you on too. Alaska's actually pretty easy. No income tax there.
Yeah.
Now I'm interested in the 7 that you don't have clients in.
So the only states I've never done returns in my career are Nebraska and North Dakota. So if you're one of those people, hey, I'd love to have you on board to say that I can. I never had a client in South Dakota either, but they're a non-income tax state. So
yeah, good point. Yeah.
Fun. Right.
So North Dakota and Nebraska. Everywhere else I've covered at some point.
All right. Cool. Well, thanks again. Appreciate your time and your expertise.
Always, guys.
We'll talk soon.
Adam.
I appreciate it.
This information is for general purposes only. This information is not intended to be a substitute for specific professional financial or tax advice, as individual concerns vary. Please see a financial professional, CPA, and/or an attorney in regards to your own individual situation. Wealth Heals Advisory Services and Financial Planning offered through Vicus Capital Inc., a federally registered investment advisor. Olson Consulting LLC, offering advisory services and financial planning, is a state registered investment advisor.